Welcome to another edition of the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. This week a little different in the sense that we have a holiday smashed in, so we're recording this before the turkey even hits the table. But hopefully, as you're watching this, you've remembered, if it isn't Thanksgiving yet, that you put that turkey in the refrigerator. When we come back, we're going to talk about what's really moving in this market. There's a lot of tariff talk out there. There's a lot of fact that we are in a holiday week, and a lot of outside geopoliticals are all still weighing in. Stick around. We've got a lot to digest on this week's report coming up after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back. As you can see, joining us today is going to be Mike Zuzolo. Mike is with Global Commodity Analytics. And, Mike, I think to start off with, this is a holiday week, and it's one of those just odd type of weeks normally when we look at these markets and don't see a lot of excitement leading into what is a normal Friday shortened trade.
Yeah, I think that's a great way to frame this, Susan, because we're in a time period now where we've got a lot of volatility in the grains and in the commodities in the post-election environment, because we're hearing more and more from President-elect Trump. And as he picks his new cabinet nominees, we're getting a more clear picture of where he's headed. And that's one of the major focuses that I've had this past month. I'm just getting ready to put up a web update, a webinar for clients talking specifically about this. And in this first part, we're really focusing on whether President Trump is as serious as he was during the election and some of the comments that he made in the pre-election time period while he was campaigning. And we got that answer this week. He came out with a specific additional 10% tariff on China, 25% tariffs across the board on all goods for Canada and Mexico. And that really sent the markets on Tuesday looking for fresh news to kind of offset the negativity coming out of the currencies. I think it's worth noting we're heading into the end of November. We're heading into first notice day with December corn, December wheat, all December grain futures. We're heading into the end of the month. And if we closed out the month as we were as of Tuesday's close, we'd be looking at 4 out of 11 months higher in the corn and in the wheat, in the soft red wheat specifically, and only 3 out of 11 months higher in the soybeans. While the soybeans number makes sense because of the global supply demand fundamentals and the U.S. supply demand fundamentals, we're talking about a 9-year low in world wheat stocks. We're talking about a 4-year low in world corn stocks. And if you add the usage to that and look at stocks to use levels, you're talking about near 10-year lows for the wheat and near 12, 13-year lows for the corn. So you can see the power of the currencies and the power of this trade fear already working into the market, and that just continues as we get later and later in the calendar year.
So what is your thought about the volatility that we're seeing within the U.S. dollar? And it has been a quiet release of information when it comes to export opportunities this week, typical because of a holiday, but some say it might be the dollar weighing in as well.
Yeah, I think the dollar, and we've talked about this before, I think the dollar and the copper and the crude oil and the wheat are kind of the 4 squares, the 4 corners of the square that makes up our price trend in 2025 when it comes to the mindset of the funds, whether we buy into commodities in terms of index funds because of inflation being pushed more into the market or not, and whether the managed money funds hold on to long positions like they're holding on to net long positions now in the corn. But we see pretty clearly that the dollar could be only at a halfway point. This is one of the key features to my upcoming webinar, and that is President Trump's tariff, if you want to call it threat, I'll call it a policy. It's real. He's got a reason for it. And I think the biggest reason does go back to China And I think there's some pretty amazing statistics out there when it comes to South America and Latin America. And one of the biggest statistics I can give you is when you look at the number of ports in Latin America or South America and the Caribbean that the Chinese have either ownership or direct control of, you're talking about 40 ports around just in our Western Hemisphere. And so you could honestly say at this point that the Chinese have broken the Monroe Doctrine of our strategic dealings in the Western Hemisphere and being the priority of the Western Hemisphere in the United States. And therefore, the Trump trade policy is also the Trump foreign policy. I think this is a real key point to be made, because then it opens up more, I think, for the ag producer, what's really going on.
And then the fact that geopolitics, I mean, I think that's just kind of been the theme the last couple of weeks in this market, not knowing what's going to happen between Ukraine and Russia, and now Hezbollah and the whole ceasefire talk, as you and I are doing this, that is being discussed.
Yeah, and this is where I'm glad you brought that up, because right when we got the news from the Israeli prime minister about a ceasefire proposal going to his cabinet, OPEC and the OPEC plus nations started to talk about not increasing their production again and extending their production cuts. And so OPEC, I think, has made a concerted effort now, and their policy is going to be to keep a floor in the price of the world oil market at this point, so that they can keep their revenues at an X number and not lose any more, regardless of what happens in the Middle East. And so this is where, to me, energy markets have always been historically important to agriculture rallies in terms of trend rallies you can really kind of sink your teeth into. I think 2025 is going to be especially important, that the crude oil market, the energy market, gives you a lot of support when it comes to agriculture, whether it's through tight supplies or whether it's through inflationary buying.
Not asking you to fully look into that crystal ball of yours, but you mentioned just a little bit ago about going into the month of December to year's end. What do you think's going to be the mood of these markets, whether it's grains or livestock, moving forward?
Yeah, it's interesting because the trade has not dealt with anything other than supply demand fundamentals when it comes to livestock. Cattle, for instance, live cattle, they've been up 8 out of the last 11 months if we close where we're at in November. Even hogs, which have got some really mixed fundamentals, have been able to rally 5 out of the last 11 calendar months. I think the answer to your question is I could see more of the same, of the market continuing to leak in terms of downside if the wheat market doesn't find support relatively soon. I'm going to put on my calendar the first 100 days of President Trump's presidency as absolutely critical, because Mexico's already replied today that we could walk ourselves into a trade war. They are looking at retaliating, and you got to wonder if they're going to cancel corn that they just bought before the election or not. And so agriculture, unfortunately, historically, grains especially, almost always on the front lines when it comes to trade, tariffs, sanctions, so on and so forth.
Well, and then you look at just our neighbors to the north in Canada, and not only the ethanol production that comes out of that country, but the potash and other fertilizers that we need here in the United States.
Yeah, and I think this is where, if you want to really dump onto it, and I'm not trying to ruin anybody's Thanksgiving in this soybean board update, but you also have to go back to what's going on with the port strike. That's where we woke up to the idea that ethanol and the biofuels, especially ethanol, really necessary market is Canada. And I think this is where the biofuel policy really isn't as big a deal with President Trump's win, in my opinion, overall. But the tariffs changed that quite a bit. So I think it's really important that I want to bring this up. And I thank you for letting me talk about this in this extended version, because of the fact that we've got a situation where we are holding a lot of 24 grain and soy right now for the most part. And we probably don't have a lot of 25 sold at this stage. And we really are kind of stepping into some historical times. We have been in historical times for the past 2 years. Plus, it seems like we're just not getting out of them.
So what about, and how thin can the cattle margins get in the next couple of weeks?
Yeah, I mean, this goes back to, if the dollar continues to go higher, I think the imports will pick up most of the slack. As far as packer margins are in the red right now, I think the last time I looked, they were in the mid 20s to mid 30s per head negative at this stage, with a very ample supply and a negative seasonal. and an available supply of pork, especially, I could see where the cattle market really does need the feeder market, really does need Wall Street. Otherwise, the Packers may get a little bit choosy. Having said that, I was very happy to see that 187 plus level trade in the negotiated cash market. And we do see cash feeders trading around 263, 265 in that typical weight class that we designate as feeders. That's a full $10 above the current CME cash index price. So the cattle really do have a much better look fundamentally than the grains do as we head into this situation, even with the Mexican screwworm issue. That's another bonus, so to speak, that the border got closed and supplies are tightening up.
As we get ready to wrap up this week's episode, Mike, marketing plans. I mean, it's hard to believe we're already, hitting the month of December. If we haven't thought post December 31st, what are your suggestions? What are some things that we as growers, as livestock producers should be thinking about?
Well, those world stocks I brought up at the beginning of the program, Susan, I think are something you can still key off of. And I would say that the cash corn just two and a half weeks ago made a 1-year high at the Gulf of Mexico. We are at about a 5.5 month high in the futures market a couple weeks ago. And so we're still up towards the top end of the range. So I think the cash corn market could be a place where you'd want to get some carry sold, sell into the March, sell into the May, depending on what your basis is. And in the beans, I think that's where you want to really work harder in 2025, not let that $10 level slip.
Well, Mike, I appreciate you taking some time to be on the show this week, and I wish you and your entire family a wonderful, happy Thanksgiving.
And the same to you, Susan. Thanks so much.
Okay, before we go, I got to ask, what's your favorite Thanksgiving treat to have?
Oh, definitely Mom's cranberry salad.
Ooh, that does sound kind of good. All right. Thanks so much. Mike Zuzolo is joining us now. You're going to have to go look for that for your Thanksgiving dinner. A quick reminder to everybody, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Nebraska Soybean Board Weekly Market Roundup.